Welcome to our next informative episode. And on this episode, I have RBC Mortgage Specialist Masa, full name Masaaki Otomo.
That's correct.
Did I pronounce it correctly?
You got it exactly right.
Amazing. And the topic today in the market, especially for those who have purchased pre-sales, and we have a different market than it used to be 4 to 5 years ago. And one of the important things that most people would know about is that what is blanket appraisals and also how the journey has been for those who have purchased condos that are arriving at a different market to complete them. Masa has been with RBC for over 5 years.
That's correct.
Specializing in pre-sale financing.
Oh, yeah.
So thank you so much for joining.
It's a pleasure to be here. Thank you for having me.
You're very welcome. So let's dive into the market. And what do you currently see happening in the market, and what do you see happening with pre-sales?
Yeah. So, definitely, we've been some interesting times back in 2022, 2023 with the interest rate kind of increasing. And now the interest rates are coming down. We're starting to actually see a lot of first-time home buyers ready to make that move to purchase today because they were waiting back in 2022, 2023. And now they've been waiting and they're starting to realize that, okay, we're hitting the norm rates of around that 3.5%, 4% today. We don't expect this to kind of really move too much as of today, unless there's, some extraordinary things happening around the world, such as the war of Iran, that's, definitely causing some volatility. But I think for the most part, everyone understands that, we're coming down on the rate environment. So people who are holding off on purchasing, we're starting to see them make the move and making purchases today.
Okay.
Why the purchases today? Because the market today is down compared to what it was back in 2020, 2019, even 2021 or 2022. Yeah, the market has slowed down a little bit where now we don't have as much confidence in the buyers, which actually leaves, for people who are looking to purchase as a first-time home buyer, it's really like a great opportunity today because the prices are a little bit lower than what they were previously. And hopefully we're going to be expecting these prices to come back up again. And just like our historical data in Vancouver real estate market, we'll probably expect to see hitting some all-time highs again once we clear this, just this downtrend of the market, I would say right now today.
Okay. So you see a good first-time home buyer activities that are happening.
Yeah.
And is that also because rates are lower and the prices have also been lower? Do you also see that developers are also have lowered their prices to attract that segment?
Oh, 100%. It also really depends on the developers as well. Every developers have different strategic game plan on how they're going to sell their units, from pricing to amenities to just floor plans, right? So for most parts, yes, I think the developers, because there's a lot of pre-sale units still available, and historically, when you used to launch a pre-sale, the units would sell out within months, like not even months. We were talking like a month and, it's all sold out. But today's time, a month passes and they still have, 50% of inventory still to be sold.
Right.
So this gives a lot of opportunity now for, yes, developers to potentially give discounts. Not all developers. I have seen discounts, anywhere from as low as 30,000, and I've seen discounts as all the way as high as 150,000. And it really just depends on developers.
Okay.
But there's definitely opportunities for people to come in today's market and purchase a unit with a little bit of a discount at what the original purchase price was.
Okay. Excellent. Let's now talk about the word appraisal that most fully don't understand. How do lenders do appraisals? How does a lender determines a property's valuation, and what factors impacts that appraisal in today's market?
Working for RBC, the bank doesn't do an appraisal itself. We hire third-party independent appraiser companies to appraise each unit.
Okay.
Why the appraisal is important is because the bank will only lend on the value of the appraisal value. Unfortunately, if you purchase a unit at 700,000 and the appraisal comes back at 650,000, well, the bank will only lend 80% of that 650,000, which means the client, whoever purchased the unit, will have to come up with the difference. And that's like kind of where we're kind of going next with the appraisal. Why is it important? Because we want to make sure that if clients are wanting to borrow the full 80%, that we make sure the appraisal comes back to the full purchase price as of today.
Okay. So that's one of the challenges in the market is going into any lender with your purchase contract at the price point you purchased 4 or 5 years ago. Obviously, they will do it in today's value.
That's correct.
And then we're going to shortly come into the blanket appraisal. And based on your engagements with people, what are some of the misconceptions you see people having about appraisals?
Yeah, so a lot of people when they go on BC assessment and they search their property, they expect that assessment to be the appraisal value.
Okay.
Unfortunately, that's not the case. First of all, BC assessment and appraisals are two completely different areas. The appraisal really, the value for each appraised units really comes back to the market at that time. And what they do is the appraisers will look at the market around that neighborhood, take a look at what was sold publicly, and we'll kind of determine what that number looks like. So what we expect the appraisers in today's market, when no one's making offers to purchase properties, now we're seeing the sellers having to cut the prices down a little bit to now sell that unit.
Got it.
So now they're selling it below the the assessed value because they can't sell it, and now that sell is now public knowledge to all the appraisers.
Sure.
So once they see the units around the neighborhood selling at a lesser value than what they were originally purchased or what the BC assessment looks like, well then the appraisers now knows that what the true value around that market looks like. So until we really start seeing the confidence in the buyers and really start purchasing again, it is a buyer's market today. You're going to be having where appraisal values are going to come under because people are purchasing it under the asking price and under the assessment. We're going to have a turnaround at one point again, just like we did 2019, 2020, when we don't have enough units again, right? When that time comes, hopefully it doesn't, but seeing how developers today are kind of pausing the developments for future builds, we might come into another situation where we're not going to have enough units again for the amount of people living in Canada.
Yeah.
What does that mean? That means that it's going to create people to then outbid other clients when they're looking to purchase. That means that's going to drive the overall average unit back up to a higher amount again. And that's what we're kind of seeing. What we're seeing today, though, is no one's really putting offers in. So sellers are cutting prices and cutting prices. Eventually, we'll hit that bottom line where, sellers won't have to cut those prices anymore because people have the confidence and the buyers are coming back again.
Right.
Yeah.
Both of us can agree as a lender and as somebody transacting and an ex-lender being at some point at RBC myself. Real estate is a cyclical market. And we have had a great amount of times where sellers were enjoying the party and now it's a buyer's party. So it's just a cyclical market, but obviously the cycles are painful when you're caught off with some big financial challenges. What happens, you touched earlier, when a property appraises below the original purchase price? So I bought it $1 million, today it's worth 800. What happens?
Yeah, so what happens is that means the bank will only lend off what the appraised value of 800,000 is. That means if you were planning to borrow 80% of the property you were going to purchase, and even though you purchase at $1 million, if it's appraised at 800,000, well, that means 160 is 20%. That means 640 is the amount that we could lend you the maximum.
Right.
As much as you want to borrow 800,000, since 640 is the maximum, you would have to come up with that difference. That means that's an additional 160,000 that you would have to come up with as an additional down payment, which can be very stressful for a lot of buyers who didn't plan on, putting additional money towards their down payment because the appraisal value came in under. Everyone that was expecting appraisal coming back at the purchase price or even higher potentially at completion, because seeing our market in the past and our historical data, it's always been going up, right? So it definitely will catch a lot of clients off guard today when they're looking to try to secure financing if the appraised value comes under.
Yes, quite a painful situation in that. And what options do you guide people that they should come up with the shortfall?
We have blanket appraisals.
Okay.
And that blanket appraisals will actually help mitigate any low appraised values coming in, because what blanket appraisals do is the RBC works closely together with the developers. And what we do is we actually appraise the units beforehand, before it even potentially comes out on the market, or it could be once, the developers have started selling. Regardless, we will come in and we will pre-appraise each unit. each unit. And with RBC, with blanket appraisals, it will come back to the full purchase price with GST, even with upgrades. We've calculated everything. If the blanket appraisal came back potentially a little bit under, we have had that, is because the developers have marked up the price without letting us know.
Okay.
As long as there's full communications with the developers and RBC, the appraised value will come back at the full purchase price. That means each individual client who purchased the unit, who's expecting to borrow 80%, can confidently come to RBC, start an application, and get the appraised value to get lending of 80%.
When does RBC processes this data? Is it like at the time when the building was launched, or is it now?
It's a great question. I think right now it's still an evolving scenario for RBC as well. We really want to start the blanket appraisal ASAP because we really want to make sure that anyone who purchases a unit from the developer can comfortably come up to RBC anytime and get that application going.
Okay.
What we're seeing today, and we are starting to make these changes happen, is usually a year before completion is when our developers are pushing hard for the blanket appraisals. Why? Because you get the developers usually 6 to 8 months before completion. They usually send, a letter to all the purchasers saying, hey, we really want to start thinking about getting financing if you haven't. And if we have blanket appraisals, and they'll usually will let them know about blanket appraisals as well. So then they can know that there is a lender out there who will lend the full 80%.
Yes. In today's market, that is a very, very valuable information for people to know. And it obviously, with the market we are in, that earlier explanation that somebody would be short of 140,000.
Yeah.
We're in Vancouver. People are all house rich, cash poor.
That's correct.
And going to a wrong lender, and sometimes people will make a decision off of that. And we had a lawyer here or I had a podcast with Goldie Law. We were talking about what happens with walking away from pre-sales. But knowing that there is a blanket appraisal option out there could mean developer don't have to go litigation. They still can qualify and get the mortgage and be patient for the next 5-10 years to do that. So that's a very an important option from a real estate point of view.
100%. I think it's super valuable, like you said, in today's market. I think unless you're looking to put like 35, 40% down payment, you almost really were looking to get blanket appraisals because there's the market today. There's no pre-sale units out there that's coming back to the full purchase price.
We have had some of my WhatsApp messages come back and say it's 200,000 less.
Yeah, right. Never fun.
Not a small amount. We're not looking at a market where it's 10, 15, 20, 30, or even 50,000. They're all in excess of 100 to 200,000. What are some limitations or risks should buyers understand before relying on this strategy?
But I think buyers should really keep in mind, in today's time, it's about planning, right? I think before, back in the days when you used to purchase a pre-sale, you look at a pre-sale unit, and if you didn't make an offer, John behind you was 100% going to be making an offer. So you're making decisions on the fly, decisions that you might not want to be making so spontaneously, right? In today's market, it is a buyer's market, right? Take your time today. Get pre-approved first so you know how much you can qualify for. Once you're pre-approved, bring that pre-sale offer right away to a lender because you have a 7-day rescissionary period to take advantage of, right? As long as you do those two important steps, either get pre-approved or qualify within the 7-day rescissionary period, those are the two ways to just mitigate, to have a negative consequences at time of completion. With RBC too, you get that firm approval up to 36 months. So once you're approved, you're firm approved. It means no employment or credit check, right? So that's also another great thing that, not all banks can offer, but I only can speak on RBC, and we definitely offer one of the best firm approvals in the pre-sale market.
Can you walk us through some of the highlights and unique values of pre-sale financing? What RBC blanket appraisal is one of them?
Blanket appraisal is one which is very strong. When RBC offers firm approval up to 36 months, that means if you're approved, within that 36 months, if you have a completion letter, that means we won't do an employment or credit check. That means if you, lose your job, there's another outbreak, like a COVID outbreak, and you temporarily lost your job, or maybe you put yourself in a situation where, you decide to buy a new car.
You're right.
Right? Well, luckily for you, approved at RBC, since we won't do any employment or credit check at time of completion, you don't have to worry once approved. It kind of gives you that sense of relief now that that weight is lifted off your shoulders. Because a lot of times when you purchase, you're still waiting for 2-3 years. You have that anxiety. You're like, okay, I need to make sure my perfect credit score. I need to make sure I don't spend any money. I need to make sure everything is in order, right? So it could create a little bit of anxiety for certain people. Versus once you're approved with RBC, that anxiety or that sense of relief is right there. And it really does create a little bit more stress-free environment.
Yeah.
What's great about the firm approvals as well is we offer something called a cap rate to start. This cap rate is a different rate from the market rate. And to be 100% honest, it's going to be higher than the market rate. Why is it higher? Because it's 100% risk to the bank to be able to quote a rate and then honor that rate in the event that rates do skyrocket. And we've had people take advantage of this. So for 12 months, just for example here, our market rate's 3.99% for the 3-year fix. Well, the 12-month is 4.69% to hold. Well, at time of completion, if rates skyrockets up like it did in 2021, then you don't have to worry. You have this cap rate secured for you that you could complete with. And 100%, we had a lot of people win with these cap rates, such as City of Lougheed. When City of Lougheed first launched in 2019, 2020, rates were really low. We're like 2.3, 2.2%. Yet that cap rate was like 3.4%. And a lot of clients were like, oh, why get the approval today? The rates are so high. Like, I don't want to, get an approval with this capped rate. Fast forward 2023, 2024, actually, when the highest, the rates were, and City of Lougheed had to complete, all clients who came to us with the approval got to complete at 3.4% when the market was 6%.
Of course.
Right? But vice versa, at the time of completion, if the market rates are much lower, then you get to complete with the market rates.
Right.
It's hard to believe, but it's a win-win situation for clients. They get to complete with whichever is lower at time of completion. And that's really valuable in today's time, knowing that you're going to be able to complete with the lowest rate.
Yes. And some of the uncertainty right now hovering around employment is obviously the introduction and implementation and the rapid change of the rate benefit. And I believe moving forward, and you can obviously bring in your input on it, is like everybody will be a very more responsible pre-sale buyer. Having all this at the forefront of clients writing a contract will be very helpful. So they have all the options in discussions. Do you foresee this market's future? And what, again, we talked at the beginning of it, it's a great buyer's opportunity. But if somebody was to be a first-time buyer or wanting to make a move, certainty gives people some confidence.
Yeah.
What do you see as the future and outlook of the market?
Yeah. So being 200% honest, we still haven't seen the confidence in the buyers yet. So I do expect prices to potentially go down even a little bit more. Mind you, the BC assessment that came out this year, depending on some properties, they went up this year. Some went down, but some went up. So it's also a little bit of a good sign saying that depending on the demographic area, there has been some stronger purchasers around that neighborhood. That being said, I still believe the market's going to still come down a little bit more. 100% the market is going to correct itself. When is that time going to happen? That's the biggest question that I think everyone wants to know. But there's no crystal ball clear. But what we can use with the historical data and what we can see is developers pausing doing constructions right now. There really isn't projects completing anytime after 2028, unless they're projects that are building a community that have going. Example would probably be BD by Fraser Mills. They're doing a big master plan. South Burnaby doing a big master plan with Ledmac. Those projects are still going to continue, but it's those smaller projects like when they only do 2 towers at a time, such as Intracorp with Gardena. They're only doing 2 towers. We got Anthem's doing just couple towers here and there. We're not going to see those developers continuing on building more towers. And that's what's going to be a little detrimental, because we're going to come to a point like we discussed about back in 2019, 2020, where there's not going to be enough units.
Right.
So what does that mean? That means that prices are going to go up when there's going to be people outbidding other people to be able to purchase that unit.
Sure.
when that time comes, we do believe, even with RBC's knowledge, they're talking about 2029 is going to be that turning point, to see that all-time high again. Our all-time high was 2020, 2021. We could expect to come back to those numbers back in 2029 and then start to see all-time highs from 2030 onwards.
Okay.
So that means from now till, I want to say till 2027, if you're looking to purchase, it's the best time to purchase today because you could negotiate the pricing. You could be patient in finding the dream unit you're looking for, right? You don't have to make a move within a week. You could be patient. Not only that, you might be lucky enough that someone might discount it even further. For example, we have developers where some clients they know they can't complete on their units. So they're, just like your lawyers talked about returning the units and the consequences.
Yeah.
Unfortunately, some people have to return the units, right? Developers are going to discount those units because they need to sell it ASAP.
Right.
I've seen, people reach out to us. I think there was a project in Magnolia by Intracorp.
Right.
They had a unit returned. And I actually did that application of the person who purchased it, had a decorating allowance of $135,000. That was the deposits that was paid from the clients that they ended up paying it back. So the developers discounted that price and someone was able to purchase that at a much discounted price. So that timing might happen. Obviously, you don't want to, wait for that moment only, because if you wait for that moment only, you're going to miss out on potential other great opportunities that might be, ahead of you. The rule is, if you're ready to purchase and if you feel like you've done the planning and you've done the structure and you can budget that purchase, there's never a wrong time to purchase in Vancouver because the prices, like we said, of 2029, 2030, we're expecting to be the all-time high again. So there's really no reason to wait, because once you wait too long, the last thing you want to do is, wait too long and now you're purchasing it when it's an all-time high again.
We have a humor in our industry saying the best time to buy was always in the rear view mirror. Thank you for the time. We covered all the most important information for our clients and people who would like to just have some general information about it. And knowing RBC's blanket appraisal, 36 months approval, and no commitment or any conditions attached until completion are some of the three highlights I take away to always remind people in the pre-sales to be aware of.
100%.
Masa, thank you so much.
Thank you so much, Said. I really appreciate you having me here today. And really, can't thank you enough for giving me the opportunity.